November, only a few weeks to Christmas. Business Insights is a very exciting webinar series hosted weekly on Mondays at midday by a panel of industry thought leaders for business owners who simply want to be in the know about the latest and most significant news and initiatives in the Australian business landscape that impact how they do their business. Our panel of advisors aim to inform, educate and provide strategic insights to the changes in the economic, legislative and financial landscape that affects small business. We aim to guide our viewers to navigate business challenges through COVID-19 and beyond. Let's now meet our panel of industry thought leaders. First, we've got Lisa Garrido from Enigma HR.
Good afternoon, everybody. Hello, everyone.
Next, we've got Sam Garashi from MoneyClip Private Wealth.
Pleasure to meet you.
Are you there, Ian?
I am, Adam. Hi, viewers. Welcome. Thanks for having me.
And of course, we've got normally Bernard Tuamau from MGA Insurance Brokers, but I think he's actually still crying over the Wallabies debacle on the weekend. And of course, I'm Adam Lyle from Biz Doctor. I'm going to turn to Lisa first today. Lisa, what's the latest and greatest with everything to do with our people?
Okay, thanks, Adam. So last week, if our viewers can recall, I talked about employee burnout and the simple ways or to beat it or signals to watch out for. So I promised that I would cover the simple ways to try and handle employee burnout, particularly now if most of us are aware there has been a slew of redundancies across the board in some of the major corporates yet again, as part of the whole transition, once again, to the new normal. Okay, so tip number one, in terms of some simple ways to help beat employee burnout. The first tip for all of us managers and leaders in business is find ways to stay well. Sounds simple, right? But basically, you need to be looking at the three things. Are you eating right? Are you sleeping well? And are you exercising? All of these three elements have a major impact on our energy, our brain power, our moods, and of course, our productivity. So they also have a cyclical effect on our health. So please just remember that there are some really simple ways on encouraging our team members to sleep well, eat well, and exercise. Now, one of the radical changes in some of the organizations globally is what they call nap pods. So these are little pods that are created for micro naps or mini naps that employees can take during the day, or perhaps making sure that they're entitled to an hour's lunch break, in which case they can go to the gym and start exercising, or just going out for a walk. Encourage people not to have lunch at their desks, for instance, and let them go out, have a break and do a bit of exercise and walking. Now, also try and avoid having vending machines in the workplace. Encourage healthier snacks, for instance, in the office kitchens or the corporate kitchens that you have. So there are little things like that that you can be quite imaginative and creative on. Second point, tell employees to take a break. Very simple, right? But taking time to relax and recharge is very important. During the COVID intense period, as you guys know, the flexibilities in the Fair Work Act are entitle employers to actually allow or enforce paid leave breaks or unpaid leave for all employees. Now, coming now into the new normal, it really is about making sure that you are encouraging your team members to take annual leave. They have it, they're entitled to it. So don't encourage a mentality where if they take annual leave, they're not significant or important to the team. Allow your employees to take their entitlements. So scheduling daily breaks, for instance, like grabbing lunch with a colleague or getting a workout, etc., or stretching their legs is again allowing them to take a break. All right, particularly now with this digital age that we're in, where we're constantly on our electronic devices, it is good to encourage people to take a break during the day. Third point, focus uninterruptedly. All right, what does that mean? So typically, we are encouraged to be multitaskers so that we can stop one task and move on to the other. And what that typically happens is a rolling effect of stress, because you're onto one task, one after the other, without a break. And that is expected in our employees. Why don't you try this? Why don't you try encourage your employees to focus on one task at a time? Focus on the task until it's completed before they start another one. Because that, in this new world, new COVID world, is allowing our employees and our team members to think of one thing at a time and do it well. So that is my interpretation of focusing uninterruptedly. Lastly, strike a balance. Make sure that you have tools available in your business to allow your team managers or managers not to be contacting your employees or team members 24/7. Make sure that your team managers are allowing a bit of a break and a balance for employees to have some space. And that is basically what you need. So strike a balance with the workflow, strike a balance with the meeting time, strike a balance with the breaks that you're taking in during the day, and ensuring that you have policies in place that create these boundaries, right? You, for instance, should not be contacting your team members on the weekend, asking them what's going on with a particular project. Just make sure as team managers, you are allowing for that balance. So in conclusion, guys, like I said last week, make sure that you watch out for the signals of burnout. And I've talked about that last week. You can watch that episode again. And secondly, learn to recognize those and create the resources like the 4 tips I've just mentioned above to help beat employee burnout one step at a time. That's it for me. Thanks, Adam.
I think that's the fantastic title to your new book, Lisa Garrido, called One Step at a Time. I've got a great friend called Sebastian de Jong who actually prints and publishes books. I think you should talk to him. And moving on to someone who actually I overheard having a very heated discussion with his boss last week, Ian McLaughlin, about him being able to take this week as a bit of a more of a relaxed week. It wasn't a very pleasant conversation, I heard. But Ian, what's the latest and greatest in everything to do with accounting and tax?
Thanks very much, Adam. So what I thought I would do today is focus on some of the ATO compliance areas for JobKeeper 2.0. So we are now at the 2nd of November. So the applications for the declarations for the October JobKeeper payments are now open. So they opened up on the 1st of November, which was yesterday, and they are open until the 14th of November. So businesses have until the 14th of November to go on to the ATO website and make their declaration so that they can be paid for the month of October. But what I thought I'd wanted to look at is some of the compliance issues. So the ATO announced last Tuesday that they have already stopped $200 million in payments, okay, from JobKeeper, and there's another $100 million under review. Of the $69 billion that has been paid out since JobKeeper began in late March, $120 million has now been clawed back. So the ATO has said that they are consistent in their approach, that they are only going to claw back these amounts if there has been a honest mistake. They will pay the ATO back through not receiving future payments. However, if there has been a deliberate or reckless mistake, then the ATO is going to be pursuing those amounts of overpayments. So let's look at some of the focus areas for JobKeeper 2.0. So it's going to be on 2 major areas. The first being the actual decline in turnover test and the incorrect claiming of the higher tier rate. So you know how we've talked previously about tier 1 and tier 2 employees and eligible business participants for JobKeeper 2.0. So for the actual decline in turnover test, the ATO is going to pay close attention to irregularities in an entity's current GST turnover in the September 2020 and then the December 2020 quarters, and any unusual amendments to their business activity statements which inflate their sales for the relevant comparison period. So this might be, for example, where someone goes on and amends their September 2019 BAS. So they're also going to pay particular attention to businesses that omit sales from their reporting or delay or alter the recognition of sales from their normal practices. So if selected for a review, the business is going to be asked to provide documentation, including sales and trading records, sales contracts and customer correspondence, invoices issued, and bank statements as well. On the higher tier payment rate front, so remember we've got the tier 1 and tier 2, the ATO may seek to understand how a business has assessed an individual and how they have met the 80-hour threshold and ask for documentation as evidence. So suitable documentation includes declaration of the business participant or employee, employment records such as payroll data or timesheets, and other attendance records, employee contracts, business diaries, appointment books and logbooks, records of store trading hours, hours billed, invoices issued, or records prepared for another business or statutory purposes. So really what the message here is before you go on and make that declaration to receive your payments, make sure that you've got everything in line, make sure that you do in fact qualify. Don't go on and amend any September 2019 BASs to qualify, because it is going to be a big compliance area for the ATO. They are going to be doing audits. So you really need to make sure that you've got all your documentation in place, not only for your sales, but also for your employees, and make sure that they are correctly documented as tier 1 and tier 2. Now, just a quick recap on how you report to the ATO whether those employees are tier 1 or tier 2. It's generally done through your single touch payroll software. So on there are buttons that can toggle tier 1 or tier 2, and that information is then linked to the ATO, and that reports it to the ATO. So then when you go on and make your declaration with the ATO, the information will be there, which employees are tier 1 and which are tier 2. So that's my main message for this week. Just make sure that everything is above board and get it done correctly.
That's great, mate. Thank you very much. I just had a quick technical hitch with my green screen. It's all fixed. I think the main point there, Ian, is to make sure that people who are watching today's video, they're in touch with their accountant and getting good advice about how to stay on top of all this. It really isn't that hard as long as you're staying on top of it. Speaking of staying on top of it, Sam Garashi is all over everything to do with finance and the money market. What's going on? Sam, what's going on? It looks like we're having a bit of a rebound. It's interesting developments.
Yeah, it's a crazy time, I would say. Firstly, just on the interest rate side, obviously all eyes are going to be on tomorrow. Obviously in Melbourne, we're talking about Melbourne Cup, and a side meeting that's going to happen early in the day, and that is the all-important Reserve Bank meeting. There are some suggestions that the cash rate will move to about 0.1%, and RBA will operate in the bond market to affect that same thing for the 3 and 5 year bond market, and that might have a flow-on effect on the fixed rate. So big news essentially might come out of tomorrow's meeting for all borrowers, especially those who want to fix the rates. Now, I have been asked about the easing of the lending rules lately. At this point in time, it's only what's been announced in the media. There's no substance behind those in terms of putting them into action as yet. And we can certainly expect something next year, but obviously at the moment, ASIC itself is going through some issues of conflict of interest and cleaning up their own back of house. So I guess only time will tell if their focus will come back into this early enough to see the impact of that working its way through. It's hard to see that happening this year, but to be honest with you. We'll certainly update our audience as soon as we get any information in that regard. Now, for those who are interested, in order for this to happen, either the Corporations Act needs to be changed, or ASIC issues a regulatory guide called RG, and that spells out how the participants in the lending space should behave going forward, which obviously will set the rules about the easing of the lending rules. But there's one thing for sure though. Banks are very happy about these announcements because up until now, post Hayne Commission, the onus of paying your loan essentially got moved from the borrower to the bank. It was almost as if, if someone couldn't make the payment, it was the bank's fault. So they're very happy because this is going to put the onus back on the borrower to make repayments to the bank. So they're definitely very happy about that. The other area is around the markets. So firstly, our market had one of its worst since the start of the pandemic. Obviously, there's a concern of the blowout in the number of COVID cases in the US and Europe, and that's weighing really heavily on the market right now. And of course, the elephant in the room is what's going to happen with the US elections. And so from what I've read and seen, we won't know who's going to win on Wednesday with so much postal votes that has to be counted at this point in time. And it should probably bode well for Biden more than Trump, given that, people are more on board with not attending rallies and so on for Biden versus Trump. But we certainly are going to be in for a very wild ride based on how protracted it may be before we know the results. Now, over the last week, the markets went down 3.5% here and 6% in US. We're still down 11% over the last 12 months. European markets were also affected. Obviously, there's the lockdowns in London, France, and Germany. England, sorry, I should say UK. England is down 3.5%. France was down 5.8%, and Germany 7.5%. So quite a hefty falls. And of course, even oil has gone down 6.5%, and even gold was a bit of a loser as well. Now, this is all happening as Australia should be in a better position. Obviously, now with no lockdowns in any state right now, and who knows, Queensland might even decide to open up their borders to the Greater Sydney, which is obviously going to be very positive for many people who want to travel there. I should also point out, though, that all these things has meant, all these activities has meant that there is more corporate activities. And over the last week, we actually had two big ones, Coca-Cola and AMP, both have had takeover offers on them. And obviously, they're very long-standing companies in Australia. So looking at the risks that we currently have around us, firstly, there's this mismatching of the asset prices. The share market sitting much higher than where it should really sit. And of course, in Australia, there's some life being breathed back into the property market, mainly due to the lower interest rate. And that has got people baffled a little bit in terms of if things aren't going so well, why is the property market doing so well? Of course, the US election is another thing that may come out of the woodworks in terms of its impact. And of course, last but not least, is the Australia-China tension. We're modeling our way through, but who knows where that's going to end up. Now, on the positive side of things, we have the stimulus package here and abroad. There's obviously low interest rates where owner-occupiers can borrow, let's say 100K. The interest on that is just a couple of $100 a month. So very affordable from that perspective. There's plenty of cash on the sidelines with people saving. I read a report that said they saved $16.5 billion in the recent month instead of putting it back into the economy. Of course, COVID concerns are easing as well. So the real test or the real battle will be these positive versus negatives, and who's going to come up, I should say, Trump in terms of going forward. And I guess we'll find out who that's going to be over the next few months. I'll provide more updates as we go, and that's my wrap for this week.
Thanks very much, Sam. Very interesting developments. I'm watching it like a hawk, and obviously the obvious question to me is when was the last time that the RBA decreased or increased the rates on Melbourne Cup Day? Typically over the last 10 years, they've done nothing. So it's potentially going to be the first time they've moved in such a long time. Sam, you actually talked about lenders and bankers, and that's what I wanted to cover today in a little bit more depth. The relationship between a business owner and a lender is now more than ever, never been strained like this. We've never had a blanket moratorium in place. We've never had a recession at the same time. And now with the potential developments of a rate reduction and borrowers going to be required to step up to the plate and start paying back their debts, this is what I wanted to make sure I give some good hints and tips on how to manage that better during this next period. That communication has to be the underpinning platform. If a person isn't on the first name basis with someone within their bank, get one. Literally turn up and say, I want to know, who do I talk to? Who is the person that I speak to about my facility, particularly in the environment if the borrower has already put in place a hold on their facilities. That facility hold could have been extended for another 3 months until the end of the year, but we're going to be facing a situation that come New Year's Eve, banks could be going, I'll have my money, thanks. And particularly with a rate reduction, they're going to go, hang on, man, you've not only got a rate reduction, you've had 9 months off of anyone threatening you to wind you up or having a crack at you with debt collection. You've got a tax moratorium as well. What are you doing with all your cash? Please tell me that you've been getting JobKeeper and actually using it to reduce debt, not just spending it and buying whatever you want to buy. That communication platform has to be absolutely strong as an ox. That's the first step. From here, you can build, what are you going to do? Here's my cash flow forecast. Oh, that's fantastic. Great. You've obviously got a good accountant who's on your side and good bookkeeping systems. Yeah, we're all on top of that. So what did you do with the JobKeeper? Oh, well, we actually paid down some ATO debt. And we also made sure that our employees were kept so that when we go back into full-time work, we've got them, and we're not going to lose them, and we can keep productivity going. And that in lies, obviously, a strong element of trust with the bank. You are more likely then to get the bank saying, hey, they're under control. They're on top of it. They've got cash flow forecasts. They've got good accounting systems. They're reducing debt. They're not just blowing it. And we can keep them in check. Because guess what? Sam will tell you, the banks actually place all clients in a risk grading. And anyone that has, and there's a risk grading report that's printed out every Monday morning. And they go, right, of the people within this risk rating, what have they done? Have they increased? Have they held water, or have they decreased in terms of their total debt or whatever other risk elements pop up on that report? And if you don't have a really good, solid communication line with the bank, the process is as simple as this. Move to distressed. They will just literally push you over to the guys in the city here, who I might add have increased their workforce by at least 20% in the last 6 months in preparation for this phase. So they're all ready to go, and they bring on ABC Proportional. Oh, look at this fella. Here we go. He's got all the JobKeeper money, hasn't paid a cent in tax, hasn't been paying us any interest, and doesn't talk to us. We're going to send that firm out there to go and check it out. And guess who's paying for that? The business owner. Can I say this to all the viewers today? It is happening now. I'm getting phone calls. I've had 5 phone calls in the last week where people are getting phone calls from their banks saying, what are you doing? Why haven't you started paying our loan back? From 1 October. So please make sure you've got really good relationships with the bank. The final part of this puzzle, and I've alluded to it in the context of what I was talking about, please know your numbers. Please make sure that you're not asking your accountant for the 2019 FYE. Like, hello, you need to be knowing what the hell's going on long before now. And you need to be on top of your numbers, not just for this last month, but moving forward. All is not lost. There are fantastic lenders out there that are non-bank lenders that are not the key number 4 in that second tier, third tier, and private lending markets that can actually provide real and affordable solutions depending on the scenario that you're in. For example, if you're growing your business and you're going really well with it, there's people like Apricity, the fantastic invoice lenders who go for making sure they're helping people grow. And there's lots of other lenders out there that will use your invoices, use your cash flow, use your assets in your business, not your bricks and mortar at home, to help you grow your business. Anyway, the long and the short of it is, get some good advice from any of the people here that are industry thought leaders, and we'll move forward. That's it from me. I've got one final word I'd like to say. The hair on the top of my lip isn't just there for fun. I'm raising this month awareness about men's health issues. And I'd like to ask everyone to please go to www.themenstable.org. David and Ben run a fantastic charity there supporting men's issues and helping men get together in a social environment. So that's where I'm going to be raising money for this month, during the month of November, and help out the men's table. I hope you all do the same. I'll say that again, www.themenstable.org. Any final questions quickly?
Sam, what are you raising funds for with that mo that you've got there?
For everything. Look, I've actually been involved personally with another charity as well, Men's Health. It's called the White House. Comes out of the impact it had to a couple of my friends. It's all around men's health, around depression, and also prostate cancer. So yeah, definitely support that.
I think the moral of all of these organisations is just have a chat with the men you love and just say, make sure they're okay.
Absolutely spot on there, Adam. I don't really have a question, but I just wanted to comment on how exciting next week's webinar is going to be with the updates from what's going to happen this week, Sam. So I'm really looking forward to that.
Yeah. So, in the good spirits of, the betting season right now, it's anyone's bet what we're going to talk about next week. That's for sure.
Totally.
Almost as exciting as the budget, eh, Sam?
Very riveting, I'm sure.
All right. Folks, my final cap off is everything that's been expressed today by the industry thought leaders is only designed for information, not for your personal circumstances, and shouldn't be taken as such. So if you need specific information about your specific circumstances, please reach out to everybody. Thank you very much. That's it from us today. Have a great week, and we'll see you next Monday at 12 o'clock here on Business Insights.
Thank you, everybody.